Okay, so there is few things that the new traders should actually know before they start trading. Uh, First of all, I think they should focus more on basic price action. This, and by the price action, I mean not like everything. I mean it's good to know most of the price action stuff, but let's start with simple things. It's like telling the trend, telling the trend on bigger time frames, scaling down to lower time frames. I think that's one of the biggest things that new traders should focus on when they start trading. Not looking for magic indicators which will show them the magic, which is not there. So, basic things. So, how to tell trend? Let's imagine this is 4-hour chart. It's really simple, guys. You just look for higher lows, higher highs, higher lows, and the break of higher, making higher high. That's it. And we already know that this trend is bullish. And if you can tell if trend is bullish or bearish, that's a big thing. That's actually big because many people can't. They start with wrong things, wrong lessons, spend many months, many years trying to find the magical indicator, magical mentors, and so on. But the thing is, they need to know the basics, and this is the basic. You go on 4-hour and you just look for higher high, higher low, and that's it. You know the trend is bullish. So what this means? This means that it will be easier for you to win with your strategy. Your win rate will be higher if you will be looking for buys. It's pure logic. There's nothing more to it. You're not selling a bullish market. Of course, if you're experienced trader, yes, you can do that. But then you need to look for confirmations and all that stuff to be selling it. But of course, you need to look for confirmations when you're buying it too. But the thing is, you already know that the trend is moving up on 4 hours. Then what you do, you scale down to 15 minutes. You look at the 15 minutes, you look for the same stuff. Higher low, higher high, higher low, higher high. And you know the trend is going up on 15 minutes. And of course, you want to know where the trend on the higher time frame is going to reverse. Then you go even on bigger time frame, like daily, and you find the right zone on daily, put the zone down, and wait for the price to reach that zone on 4 hours. And then when you are at that zone, you scale down to lower time frames, like 15 minutes or 1 hour, and you wait for the confirmation at that zone. If the price is like you're watching 4 hour and 4 hours going up, and you see on 15 minutes that the price is breaking this low, it was making higher highs, higher lows, and then it broke the low. But it's not important because the price is not at the bigger time frame zone yet. It's maybe a liquidity grab. There can be many reasons why it does that. But overall, on a bigger time frame, on a bigger scale, you know that the price is bullish. So just wait for the price to get right, and wait for the same patterns. Focus on one strategy and everything will be all right. So just learn how to tell trend on bigger time frames and smaller time frames. That's a big thing for the new traders. The next one is psychology. And psychology is maybe the biggest thing that the new traders should expand their knowledge in, because psychology is probably the biggest reason new traders fail, because the new traders usually think, especially when they see these traders with Lambos and all that stuff, that trading is easy. It's just like a growing money tree, and they just pick the money off every day, and it's not like that. Those traders who has actually earned from trading, they are losing too. The main difference is that the traders who doesn't have the right psychology, the right mindset on things, they quit, or they switch to a new strategy. That they don't test that strategy enough, and they switch to another one and another one and so on. They need to stick with one strategy. That's it. And they need to understand that losing is all right. Everybody is losing. There is not such a thing as 100% strategy. There is no golden indicator. There is no golden signals. Even the mentors who send signals, I mean, it's not bad. Yes, you can trade with the signals, but in the long run, it's better to understand the trading yourself. But even those signals will not be 100% win rate. You need to understand that. So psychology is a big thing. There's many traders, especially at the start, they have this lucky days, lucky weeks, and they're like on win strike, and they're just winning and winning and winning. And they think, oh, this is really easy. And next week, bombs, their account is gone. They're liquidated, everything. So yeah, you need to learn psychology. That's a big thing. Like, I'm always saying that every strategy works. The win rates, it depends. One strategy can have 60% win rate, second one can have 50, 70. It really depends on the style, how you trade. Is it scalping or swing trading, maybe longer term trades using just 4 hour and daily and weekly? It really depends. But every strategy but can be winning strategy. But you need to understand that you will lose money. It's like the rest of us. But of course, everybody is losing money sometimes. But here comes the third thing, money management. And that's one of the 3 biggest things, money management. And money management will save you big time if you will really, really strictly use money management when you're trading. I know many traders who has lost their accounts, and actually my first live account, at the start I was 200% winning, and because I did not use proper money management, I lost it all. I lost it all in 3 weeks, just like that. I was risking too much, and my profits were not enough. So money management is a big thing. Imagine, like, the trend is bullish. On lower time frames, trend is bullish. So you find your right zone. What you want to do, you want to stay with one strategy. You put down your trade, you put down your stop loss, but then you stick with it. You don't quit, you don't take profits early, you stick with it. And you look at the bigger time frames or smaller time frames, it really depends on the strategy. You put your, take profit to forex. and it goes there, and you just won a trade. You were risking 1, but you won 4. So it means that, like, if you lose the next one, you are still 3R plus. This is the money management. You need to stick with your trades. But of course, after a while, when you are getting better and better, you will see that okay, you join the trade, and you see that, okay, I joined at the start, it looked like it's going to go down, but then you see, okay, the candles, they start to look pretty bullish, and if you don't feel comfortable, yes, you just close the trade, and that's even better. And yes, and then it just goes up, not down. Yeah, after a while you will start to see all these things. But yes, money management is a big thing if you want to save your account, if you want to trade longer and actually survive in this business, because it's not possible to predict 100% what is going to happen in markets. It's impossible, and people need to know this. There is these gurus who tell that yeah, I have this win rate of 100%. I'm buying Lambos and all that stuff. They're just talking trash. It's pure marketing, just so you go and buy their courses or their signals, and that's the money they actually get. So there is no such thing. So focus on three first things when you start trading: basic price action, psychology, and money management. Learn this and you're good to go. Thank you.